Good morning and welcome everyone to the Trading Talk Uncensored live Q&A session. My name is Danny and I will give you the webinar today. The first thing we will do is we will go through the previous question that our team has prepared and we will do our best to answer them on the chart. The second part is the dynamic questions, which are questions that we can take from the audience and answer them live. Okay, so similarly, we will write them down here and we will do our best to again give the best answers possible. The third part is more informative, just to share with you some links here to save you the trouble to find it by yourself on the website. Just some useful links. And lastly, we have here this slide with analysis template that's supposed to help us explain analysis approach, but I rather use live data on the chart than the templates here. We'll see how it goes. All right, and it's important to understand that any capital markets and trading information disclosed in this webinar is provided for informative purposes only and should not be constructed or applied as an investment advice, recommendation, or a suggestion. Furthermore, a very common question is if it's possible to watch the recording of this webinar, and the answer is yes, and very easily. All you got to do is just to search for AvaTrade's webinar on YouTube, AvaTrade, and on our channel. You can find a lot of content. As an addition to the recording of this live Q&A, you can find a lot of webinars regarding analysis, regarding certain calculations from risk money management, which is also useful, which I'd highly recommend you to check anyway. So the first question is, what is margin and why do we need? Probably it. All right, and this is an excellent question. What we're going to do is simply we're going to go to the chart, find ourselves a decent asset to work on today, which can be maybe one of the commodities and maybe metals. And maybe gold as a signal. Yeah, slowly getting onto the 3,000 mark. Okay, at least from what we see today, already 2 weeks been bullish. And okay, now what is margin? So margin is the interpretation of the funds that I have in my balance with the leverage. Meaning, if I'll take gold as an example and I'll click here on buy, we can see that we have here something called leverage. Okay, and just to simplify things before we're moving forward, a couple of notes. First of all, the interface we're seeing now is not MT4 or MT5. It's called a web trader, and to access the web trader, you must log in with your email and password into the website, and you're going to see that right away. You don't have to download or install anything. As in addition to that, you can also, of course, find it in your phone. This is the desktop version. You can find it on the phone as well. It looks very similar with similar features. The second thing I wanted to say is that the general agenda when we are with a buy is that the value will increase. That means that the higher it gets, the more we can make, and the lower it gets, the more we can lose. Okay. It's at the moment just irrelevant for the question, but I think it's important to begin with that. Okay, now let's suppose that we wish to buy some gold and we wish to buy, this is the number. If we look at here, we see something called lot, LOT for lot size, and this is the amount of contracts we have for gold. So in one lot we have 100, in 10% of a lot we have 10, and in 0.01 we have just 1. So let's assume we would like to take 10, and for instance with the price that we have at the moment, so this is the price for 1 unit, right? Price per unit is, let's see, 2948.78. Okay, this is for a buy, of course. Number of units, we said it's 10. We just saw that it's 10. Okay, and what we can do is price per unit times number of units equals value, And of course, whoever is using this interface does not need to remember how to do this calculation because it's been done for you automatically and it's displayed right here under value. Okay, which if I'll simply go 2948.78 times 10, and we can immediately see exactly the number. Okay, and we can validate this very easily. Okay, great. Now, if we carry on with the next ingredient in here is the leverage. And what leverage is doing, leverage multiplies buying and selling as if I had more in my account. Again, it's not a loan, it's not increasing my balance in any way. It just gives me the ability to acquire more units with my same balance, the strength, if you want to put it this way, to multiply my. Now, how does this work? As you can see, we are multiplied by 20, so hypothetically my 10 will have the ability of 200,000. And why is that? Because, okay, oh, sorry, 10,000, my bad. There you go. Okay, now, it's important to remember that the margin here, we can also check it from here, instrument details, and we can see that there is margin percentage 5%, 5% off, 5% of the total value for the position, meaning number that is in here. Yeah, since this is the value. Okay, so one way is to take the 29,483.5 and to just multiply that by 5%, and this is what we have here. So this is one way, value times percentage equals margin requirement. Another formula to do this is simply value divided by leverage. Leverage equals margin requirement. And I'll just, value times, we can also divide 100 by the leverage and know the percentage that we need. We've already got it in the instrument details, but this is another easier way to just do it with the same logic. So what did I do here? Because I am multiplied by 20, I can just divide this by 20, and that's the result. Yeah, we can watch it together. Okay, divided by 20, and this is again the same number that we get. So for people who are using this interface, you don't need to remember that in your head. You can just use it in the website. Okay, now the reason that we needed, primary reason, is to open the position. So we need to ensure that our margin level is viable all the time and it's not dropping too much, because if we come to a point that we can sustain the position and the market go against us, the platform will start closing the position from the biggest one I have to free up the margin. Additional solution that we have is I could always contribute and add more funds into my account to increase my margin. Okay, but in case that I don't do so, the platform, as I said, will close the positions to free up my margin. Okay, and the margin is changing dynamically to how the market is moving, meaning the more money I'll make, the more margin I'll have. If it go against me, then I'm losing margin, and my margin decreases and decreasing. Now, it's important to remember that before you're opening a position, you can see the margin impact in here. Make a simple comparison to the available margin that you have, also known as free margin. Why? Because at the moment, if I will increase this 0.1 to, let's say, 0.54, Let's maybe increase it even more. Yeah, almost to the limit. So there we go. This is approximately the limit. This is the limit. And as you can see, if I will take the position here, I'm going to use, well, most of my available margin, right? So to take another position on top of that, to diversify or hedge or any other thing that I would like to do, I won't be able to, okay? Furthermore, when I leave myself additional margin lying in the account, it also allows me to fuel the position if it go against me. In other words, for instance, if I'm taking the position as it is, and let's just extend it by a bit, okay, we can see that this, okay, let's maybe make it a little higher, maybe a flat 3,000. We can see that we can potentially gain 3,000, right? 3,500. Let's go for the same ratio. Okay. All right. So the way that we can easily do this is we're going to take the same difference that we have in here, 54, and simply subtract. And that's the number that we need. There we go. Now, in this particular case, we can see a ratio of 1 to 1 with potential gain of 3,600, potential loss of 3,600, which will represent 3%, 35% of my account as compared to 10,000 balance. Okay, a very simple equation to know the exposure of your account as compared to the possible balance is to simply divide your potential potential loss by the balance equals factor, and then factor times 100 equals percentage exposure. Yeah, and in this case, if we're going to divide 3,500, sorry, 3,600, we'll divide it by 10,000. That's 0.036. And if we multiply that by 100, then we get 36%, right? We can validate this with a calculator. Okay, and then we can see that this is 36%. Why am I showing you this? Because if I'll take the position as it is, and I'm going to use 98.7% out of my valuable margin, and I, God forbid, lose this amount, I'm actually not going to be able to take another position like that, right? On top of that, if I have two positions and one of them closed, it can lead me to a very low margin level, which can again cause my platform to close the position. So I need to be aware of the margin that I'm using, of the margin that I can potentially gain or lose, so I can keep my account stable, and always to keep the account, the margin level at 100%. Okay, this is at least I have to try. Of course, trading is very dynamic, and we cannot ensure all circumstances the way that we want, but we can at least prepare ourselves with additional margin and prepare our next moves according to those kinds of preparations. Of course, I'm not giving an opinion here if it's good or not, because the same way I can lose some money, I can also make, right? Look how much money I can make. That's not bad. Yeah, but I need to take the margin into consideration and to keep in mind that it's always recommended to keep it at a healthy level. To A, be able to take a position, B, sustain the positions that I already have if it go against me, and C, to be able to do additional things such as hedge, diverse, and so on. And as I have explained, it's based on the leverage. The margin is based on the leverage. That means that this 5% may differ to a different instrument if we're going to look at something else with different leverage, like copper. So the margin here will be 10% and not 5. Why? Because again, as I have explained, the margin is compared to the leverage, and this is the interpretation between the funds that we have multiplied by the leverage. So we need to have 10% as collateral before we're opening the position that will be available. Okay, as I said, we can simply divide by the leverage, and there we have it, just automatically embedded in the platform. Okay, great. So what we can do is we can write here, margin is the interpretation of my balance after the leverage, and based on the leverage that I have, I will need a certain percent as margin. Okay, as I have explained, if I will divide 100 by leverage equals margin percentage of the value. Yeah, if my position is 100,000 and my margin is, and my leverage is 1 to 10, I'll need 10%, which means that I need a 10,000 available margin. Okay, you can, again, this webinar is recorded. You can watch it again if this bit is a bit more complicated, very, very easily on our YouTube channel. Is there a certain way to ensure the outcome of a trend? Absolutely not, at least not that I'm aware of. Of course, the world, we're at 2025. Of course, there are things beyond my knowledge, but as far as I'm concerned, there is no way to ensure the outcome of a trend. We cannot know for certain anything. We can only assume. Of course, there are level of assumptions and there are levels of analysis. We can begin analyzing just by looking at one candle. Okay, so analysis can be brought to different levels. So we have analysis levels. Okay, one is we can analyze one candle, right? Then we can analyze maybe a pattern, right? And then we can, after we analyze, we can place support and resistance. And this is just technical analysis. And on top of that, we have indicators. And on top of that, we also have other statistics that we can apply on top of that. And on top of that, we have fundamental analysis. So if copper is moving this way, I would like to go and see the news. Maybe something on the news can hint me why copper is why copper is moving this way. Maybe it's related to the economy somehow. Okay, so there are a lot of ways to increase the level of analysis and to assess better what we think that can happen, just rather to blindly analyze one candle. Again, so this is 3 levels. I can proceed and make another 20 levels on top of that, right? Indicators and fundamentals and statistics, and to include a lot of things into that. But at the end of the day, after all of that, there is no guarantee. Okay, there's no guarantee. The market can always turn around. So we must optimize our analysis, at least to my opinion, to a sufficient level that we feel we can, we can take the position. Okay, the level of analysis you want to do, it depends also all the time that you have available. the level that you are at in terms of experience. How can you identify those kind of things? What indicators you're using, what markers you have on the charts, right? All these things are things that can be acquired with time, and it's completely your choice up to what level to take it. But at the end, and after all of what I said at the moment, we can still there is still no way to ensure the outcome. Okay, so to conclude this, what I will write down is we can take action on different levels of analysis to increase the precise assessment we got on the market. However, we can't pinpoint any guaranteed result. Okay, we can't guarantee anything in the market because the market is dynamic, and this is okay. This is basically, as I've explained, this is what we can do. We can take it to a different level. We can add all kinds of layers. We can have signals. We can have all kind of things, but we cannot ensure. We can never ensure. What is the most recommended instrument to trade today? Well, there are several ways to know that. One of them, okay, again, there is no, at least for me personally, I can't recommend you anything specific, but I can show you how to find it by yourselves. So one of the ways that I like to find my as you can see right here, you have most rising, most falling, most buying, most selling. Okay, hot here under the trends. This is one way to pick up an instrument to analyze. Another way is just to go to here to discovery and under market buzz to find by the level of mentions that it has. This is another maybe a nice way to do it. And as you know, the bigger the circle is, the more mentions it has. And by clicking on the circle, it doesn't matter what I maybe go with Intel. Okay, and as we can see with Intel here, we have different topics. We have executive resignation, we have execute appointment, joint venture, earning negative, and price tag raised. So all of those topics are the articles presented in here and can be filtered very easily by marking the box. Then I can specifically read the articles related to the executive resignation. Okay. Now, if I want to change to another instrument, I can click in here on the arrow and just quickly go back. I don't have to see it this way. I can change the layout to something else. Okay, we see this filtered by the different categories for each stock that we see here. Okay, this is a nice way to find your instrument, as I said, from here or from the outside by manually going through the categories of most rising, falling, buying, and selling, and just to choose what's best for you. Okay, so on the web trader, there are different there are different categories and of most falling, most rising. What else? Buying and selling, which allows us to pick from the list. And the other one that we saw on the market buzz on, okay, another way. Doesn't want to work out for us. Okay, no problem. Still, okay, maybe now. Okay, another nice, another way is to use the market buzz under discovery icon. Okay, the last question we've got is, can I make money if I only trade once a week? Well, there is a whole strategy based on that called weekly trading, right? Of course you can, but that depends. As I always say, the time questions, that depends how you're using your time, right? Can I have results if I'll go to the gym once a week? Of course I can. Of course I can, but it depends at the time that I will go to the gym, what I will do there. If I have a coach, if I have a plan, if I have a workout, if I also my dietitian as well, that depends, right? So on trading, well, can be the same way. If I trade once a week, but I have a plan, and I do it when I'm on the charts, I do it efficiently, and as I have explained a few minutes ago, I do analysis and I make progress. Well, of course, I can make money trading once a week. But if I don't, it doesn't. Let me just show you an example here. Let's use one of the instruments from the maybe indices. Okay, let's go with NASDAQ for now. Okay, so for instance, as you can see, we are already on weekly, right? So weekly, W1 for weekly. NASDAQ is going down 90,500. So let's assume that this seems like a sell, and we are with one indice. As we can see, the average movement at the moment based on the ATR applied is 910. Okay, so we can assume that it still has some way down. So let's say we'll take roughly half of that, and we will yeah, let's just make it this way. We are with a buy. Oh, sorry, that needs to be the other way around. So we'll take that, place it here, and then okay. Now, oh, I've made a mistake. This one needs to be there. We go. And now with $500 away, which is half of the average, we can see that we can make 500, and I have a reason to believe that it will move such a way because of the average true range. And very simply, I can have a position, run it like that, okay, once a week. And sorry, again, we are with a sell. That means that this will be our take profit. This will be our, yeah. Okay, and as you can see, if I open the position, this position, and I hold it for a week, I can make 500 just like that. Of course, I can also increase it maybe a little bit to make it more significant impact, and to make even more, or potentially lose even more. But the point here is, if I design the position and I'm working with some guidelines and strategy, time shouldn't really be a factor. Of course, as I have explained many times, if I do spend more time on the chart, but I'm doing it effectively, and that means that I extend my sessions from 20 minutes, half an hour, to 2 hours or 3 hours, and I'm leveling it up, and I have additional margin, of course, I have more potential to make more profits, and as well to have more losses. This is why, as I have explained many times, the process is important. We shouldn't be lazy and just jump on the first candle we see. We can do further analysis and so on and so on. So to conclude the answer to this question, can we make? Yes, that depends. The time we spend on trading depends on the way we are using it. If we are going through the process of analysis, risk money management, of course, you don't have to do all of that. You don't have to do. You can get lucky once a week, click here on sell, and get lucky, make profits. But the reason that I keep mentioning those things is because without those things, even if you get lucky once or twice, it's difficult to sustain that. Okay, and usually we would like to have some consistency and not just to get lucky once or twice, but we would like to have a system that will allow us to do this repeatably, or at least systematically. Just keep using it. Okay, so yes, the time that we spend on trading depends on the way that we're using it for going through the process of analysis, risk money management, and proper preparations. Okay, the time once a week is enough to make some money. Again, I'm not going to specify the amount, and of course, if I want to make a much bigger amount than that, I need to have much more margin than that. And as I've explained in the previous questions, the more I will use, the more I'll be exposed. The more I will use, the more I can make or lose. Okay, and you can see here that while I increase it almost all the way to the top, currently it seems like we will be using 97.7% of our free margin just to occupy this position, and that means that half of our account is jeopardized. We can make or lose 5,000, which is half of our account. Again, we're not going to enter into a discussion if this is good or not. You guys can figure it out by yourselves. But we can definitely understand that in this scenario here, I can't have multiple positions like this. Okay, I physically can't. I physically don't have the margin to do that. So this is why I keep, even though it's not mandatory, I keep mentioning those things to prepare the position wisely, and then the time, whether if it's 1 week or maybe even once in 2 weeks, who knows, right? But if it's designed well, then still, okay. And yeah, that's regarding the question here. We'll take that, we'll paste it as our answer. Great. Okay, now the next slide, as I said, is more informative, so I'm just gonna send it to you over the chat. Okay, the first link is for AvaTrade's education, for additional education, and then the login and deposit is if you're still on the demo and you would like to make some progress and practice with real with the real account. In here, you have the FEC and the Help Center to help you with additional questions. You have maybe more formal question about the account and so on. And then you have here the real account. Okay, and lastly, the Academy, which is also accessible via the website. And I'm going to show you a shortcut how to get to the Academy in 5 seconds from this interface. As you can see, the menus here at the menus to the left here. Okay, we have several menus. Here at the top, I have my personal details. Trade is where we are at. We can get to trade from here as well. Then we have positions, orders, history, signals, news, and discovery. And underneath, we have the additional platforms. Now, in here, we have the chat, and just above the chat, we have the Academy, which we can click and will take us to the Academy. Okay, that's the second here on the panel. And above that, we have tutorials. And in tutorials, you can have additional information and you can learn even more how to utilize with this platform called the Web Trader. We have many topics in here in the platform review. We'll scroll down, and where we're scrolling down, we see trading basics. We see here stock fundamental, stocks market fundamental, and much more content that we can enjoy just by clicking here, and we don't even have to leave the interface here. We can click play right away. Okay, maybe not right away. We're giving it maybe just a few seconds, and with sound and everything, we've got it running. Okay, so apart from what I said and apart from the webinars, you can also have access to this content on the Web Trader, and I highly recommend you to do so. All right, before we say goodbye, I would like to give you guys today the Q&A benefit, which you can give to your senior account manager, and with that to receive a one-on-one premium market review with your senior account manager. Of course, beside the webinars, I think the most useful thing is that to see live data, to do live analysis, to have somebody on the line who can assist you construct your analysis. And this is just practical. This is very practical, so enjoy that. Okay, you can copy and paste it, give it to your senior account manager, and then you can receive one-on-one premium market review just with him. All right. We are out. Our time is run out for today. I hope that you've learned and enjoyed the questions that we had. You are all welcome to join us next week for the live Q&A. As I said, the recording should be uploaded hopefully today, and you can review it in our YouTube channel to recap if you want. Until then, I wish you best of luck with trading. Have a fruitful day.